After starting the week really strong and then kind of muddling around for the most of the week and with some up and down moves, we finished with a nice strong move to the upside. We got a pretty rare overbought pattern on the NASDAQ 100, so I'm going to break down what that is. I'm also going to break down another time where we've got a very similar pattern. A time that I've compared our current market situation and environment to in the past. So I'm going to break that down in today's video as well, and just how bullish we are, and what we can expect to see here in the upcoming weeks. We're also going to break down what can be from a intermarket relationship, what can be a driver for bullish markets going forward from here, and why things do not hardly look strongly overbought at all from a certain perspective. So I'm going to show you that with our trade idea of a stock that looked like it had a little bit of a false breakdown to the downside, and talk about how to trade that pattern. So let's go ahead and get started. Today is Friday, July the 10th, 2020. This is the Market Outlook from MarketScholars.com. My name is David Settle. All right, well, let's start off taking a look at the market forecast on the S&P 500. You'll see that we finished the week with a strong bullish posture. The intermediate line rising again, and it has crossed above the market sentiment line. So intermediate line over there, you can see on the left, is at 76, over 76. Market sentiment line is about 73.5. So nice, good move on the S&P to get up there. The momentum line jumped up to a high level from being an extreme low. That's pretty much an extreme high point for the S&P. The near-term line also rising up, or staying up in the upper half of the chart and rising back towards the upper reversal zone. So really good bullish end to the week and a bullish pattern. Obviously dark green shading in the green line. You can see we're moving towards the 0% level. We're still we still haven't broken the 23% retracement of this whole intermediate rally we've been on, which means basically that the intermediate line hasn't fallen below 50 yet. And you notice of the decline and subsequent retracement of the decline, we have gone through the reversal zone here. We have gone above the 78% retracement, which signals a change in trend. A little bit of an island reversal there initially, but this time we got above it, and now we've stayed a whole week above it, up above that 78% line, and are moving back towards 100%, which means that we are changing the trend, right? The trend was to the downside, and now after retracing up towards resistance, instead of falling back down and continuing the bearish trend, we're changing the trend to a bullish move. Again, very similar to what we see on the NASDAQ. The NASDAQ, of course, is very, very bullish and continues to be. One little thing that stands out to us on the NASDAQ, though, it finished the week with a cluster above the 80th percentile, including market sentiment. So every single line is above there. So it's one thing to get a cluster at the beginning of the intermediate run where market sentiment is still pretty low. It's another thing to get one after in a mature run. I don't know if this is the end, but this is a mature. We do know this is a mature run because we're close to 3 months into this, and the market sentiment line's above 80. See, over here is the last time we got a cluster with the market sentiment line here in the early part of 2020. But we did continue to move higher, so it's not like the end of the world. This is a really good cluster where you start off an intermediate run, you get a strong cluster, and that gives you a good chance of this kind of move coming after that. So, but what stands out to me on the NASDAQ isn't just the cluster on the daily chart, it's also the cluster on the weekly chart. That's a pretty significant. If you look at, on the weekly chart over here in January, again, we got a cluster this week, and we had a little bit of weakness, but then continued higher into February before we fell down, and we had that cluster there. Here is a cluster. Again, market sentiment line is not, it's above 75. It's not quite above 80 like these were, but it's a strong cluster. And this actually makes me think of, if you go back on this, go back as far as we possibly can on the NASDAQ, and then let's throw on the PPO pattern here. And let's see how far above the 30-week moving average, because that's what the green line is there. The 30-week moving average, and see how far up above we are relative to where we've been in the past. And if you go back here, so we're at 19.07. If you go back over here to 1998, after a pretty decent pullback in August, September of 1998, and then at the beginning of October, a pretty significant decline, long-term capital management, big. I mean, that's in a couple of weeks, just a couple of weeks here, and I know everything compared to this drop we had in March is pales in comparison, but you notice in 2 weeks we had dropped 24%. From the close here to the low point. And so it wasn't even really a full 2 weeks. But in less than 2 weeks, we had fallen 24%. That was a pretty significant drop at the time. Obviously not 34% in 4 weeks, but still pretty significant. And that was after some bearishness that we already had. We had dropped pretty far below. And then we recovered to this point of weekly clusters by the end of November, by Thanksgiving essentially. And you notice at the time the PPO was between 17 one week and 21 the next week. So essentially where we are right now, very similar move to where we're getting here. And you notice in the rest of 98 into early 99, and then after some sideways action in 99 towards the end and into March of 2000, I mean, from that cluster, even if you just go to the second one all the way up to the high, the NASDAQ went up 188, NASDAQ 100, mind you, went up 188% in that period. So just over a year. It's a tremendous move after we got the weakness in 98 and after we got the weakness in 98 and after we got the cluster, the overbought cluster there in 99. There we go, sorry. My mouse stopped working there for a second. So then again, so it is pretty significant. I mean, we haven't had the PPO in about to 19 since all the way back to 99. Like even in coming off of these lows in March of 09, we never did get to 19. So this is the highest level we got since back here, and we were actually above 19 multiple times in the late 90s. So it kind of goes to show that this isn't like as bullish as we are on the NASDAQ. This is not. We've been more bullish. Like we've been more bullish than this, and this is hardly but it is, and this is why people are kind of going nuts right now over how bullish it is, because it is the most bullish NASDAQ has been since the late 90s. Having myself traded in 98 and 99, this is very similar. But like I said, you could have said in November of 98 that we were extremely overbought coming off of that low point, and yet we just continue to go higher. And I see this is, the NASDAQ was pulling away from the IWM in a severe way back then, and it's doing it again now, and it's different reasons. A lot of technology was pulled forward then because of Y2K. Well, now we're getting a lot of technology pulled forward because of coronavirus. It's creating a bigger urgency in building out this work from home, doing everything online digitally from a workplace environment, and then building out this 5G capability to make that possible. That's all being pulled forward right now in the last so many months because of this virus. Let's take a quick look at the Russell 2000. You notice the Russell 2000, its intermediate line is not crossing back above the market sentiment. In fact, it's well below. The short-term sentiment does look improved, and we held a 23% retracement, but it kind of goes to show again the discrepancy between the NASDAQ 100 and the Russell, which is more reflective of the overall economy. So there's still some weakness, and that weakness is growing. So we'll kind of keep our eyes on that to see whether that's going to lead us into more weakness across the board that we just don't see quite yet in the NASDAQ 100. The NASDAQ 100 is still strongly bullish, and we don't see the weakness yet there showing up. But if and when it does, again, a move down to 9,800, which would actually still be above this high now. I mean, that would be a noisy move. It'd be a significant move, about 1,000-point drop on the Nasdaq, almost 10%, and it would still not be a pullback because it would only be coming down to the 23%. That's how bullish this is. So so just be prepared for noisy drops that are a lot more uncomfortable than anything you're accustomed to from back here. But it's that way because the rise in volatility we had with this drop that's elevated, that's continued to elevate volatility and made moves like this more easier to happen because of how high volatility remains. All right, before we look at some other charts, I invite you to subscribe to our YouTube channel. Mouse over our logo or this icon right here. Hit the red subscribe button that pops out. There's also one down below the video if you're watching us here on YouTube. That notifies you when our videos are posted. Also, while you're down there, hit the thumbs up icon. That tells us two things. Number one, you liked our video, and number two, it tells us you want us to do a video again tomorrow. If you like our videos, if you want us to do a video again on Monday, then let us know with one click right now. If you don't, then you don't have to click on anything. Also, too, comment. What did you get out of our videos today? What questions or comments did you have about anything I talk about? Post that in the comment section. Join our website at marketscholars.com. There's a link popping out right there at the top right corner of your screen. That will take you to a page where you can subscribe to our site for free. Follow us on Twitter for more content in between the videos from day to day. And join our Market Outlook Facebook group that we've created. If you're watching us here on our blog, we invite you to check out some of these other things, including our Market Outlook Live. So every time I do a Market Outlook video, I also do a live video on the same day at 3:30 Eastern Time, where we review all old Market Outlook trade ideas. We continue to trade them all the way up to the time that we close them. So if that's something that we do a trade idea every time we do one of these videos, if that's something that interests you to see. How do we trade with these up to their close? And then make sure you tune into that. That actually comes with our monthly subscription, including all 8 of our trading rooms. You can see we have coming up here this week, our next few. You get access to all of our trading rooms here if you click on this link. And then, of course, our premium subscribers get access to that Market Outlook Live and the trading rooms, as well as the community, the communities associated with each one, and all of our premium tools and charting resources that we have. Also, engage with us down here on social media. Click this heart. It opens up a new window, and hit that like button right there. Click this thumbs up, takes you to your Facebook page, where you can also click on that like button there. Again, the more you do that, it benefits us because the more engagement these posts have, the more Twitter and Facebook will promote our content to all of our followers, make sure everybody sees it. It also benefits you because they will promote content in your timelines from the accounts that you engage with the most. So we try to make it really easy for you to engage with us here. All right, let's take a look back at the chart now. Let's take a look at the long-term chart and how we finished up this week. I mentioned there was a cluster on the S&P, but on the Nasdaq, but you notice on the S&P we got a really good bullish candle, and we're most likely going to start off with a bullish candle on Monday because you can see the open will probably be right around 31.09. It's the midpoint of the candle, or 31.14. This area is going to be where the open is. We're trading at 31.85. That's where we close the week at. So we're going to start off with a pretty decently bullish candle to begin with. The high here is 31.86. So we, again, the 3 things you look for to continue these bullish trends is a higher high, a higher close, and no lower shadow. And so we have a good chance for that to continue to be the case, especially with a rising moving average. You can see the Dow is kind of turning around or turning back up after some transition. The Nasdaq is just insane here, and then of course, and that's why that cluster is showing up. And then you can see the Russell is also another transition, but again, good chance to start off pretty bullish because it's going to be opening up right around this 13 area. So we'll see how that opens up this next week. If you take a look at the 3 green arrow chart, of course we got 3 green arrows on the S&P. If you look at the 2-line version of that, the MACD is rising. The 8-day moving average held for support on Tuesday and Thursday for that matter. The 8-day held, we're still rising. The stochastics is in the upper reversal zone. That's average is in the upper reversal zone. The MACD average is also rising. So good, good looking pattern all across the board. The 8-day, the MACD is really high on the Nasdaq, as well as its moving average, about as high as it's been during this whole rally, and of course the stochastics also. So very strong bullish trend for the Nasdaq going forward here too. In fact, if you take a look at the RSI for the S&P, it's kind of flirting with getting back above 60 again. The Nasdaq's actually above 70. The Russell's the one that's not quite as bullish because it's kind of stuck here in the middle. So it kind of really needs to get going, and we're not really seeing it get going here. And again, this is more reflective. It's one thing for this to lag the Nasdaq, which, you know, again, there's really some popular stocks in the Nasdaq, and a lot of things are being pulled forward here. But it's another thing for it not to, you know, not really to take off and move. And that since the beginning of 2018. It's been the Russell's been really struggling to keep up with what's been going on in the Nasdaq. This isn't a recent phenomenon. It's been going on for a couple of years, over a couple of years now. Let's take a look at the Bollinger Bands for SPY. You can see again how, you know, we're kind of clearing this volume node that's acting as support, but you still got one right here before it can really take off again. Whereas QQQ, you can see path of least resistance is to the upside, and the further we go up here and stay above the 75% mark, the stronger the bullish move. You know, again, the tightrope gets further away from the ground. The ground is down here where that 23% retracement level is. That's where this old high is. That's where some volume nodes are. So it's very, very, very easy for it to move in that direction. But you can also see too, you know, even by this week, you can see the purple lines telling us where we can close by the end of this week. You know, it's pretty close up to that 162% retracement of the decline. That's how strong this move has been in these large cap tech stocks. All right, now let's take a look at the intraday chart for the S&P, and you can see the strong finish we had got us up to a new 4-week high point. So nice little rally off of this low, though we were really, really close to breaking that 38% support level on a near term. So this would be the near term run that we had, the blue line on the market forecast. Now starting anew, going up to a new high. So nice, good move here. You can see what the volume ended up being, very, very light, 57 million shares trading, just a little bit below average on the ATR, still relatively high too. You remember, it's not till we get to about the 3-point mark on the ATR is when we're going to be settled into a bullish trend. So you can see how we're still not quite there yet. The ATR is still flirting with the 2% mark, which, if you kind of give some perspective here, in the last 10%, the last 10 years, getting to a 2% mark here was actually the high point for any periods of volatility. And so that, again, goes to show just how volatile we remain, even with the decline here in volatility below the 90% mark. So, which is not very common lately for us to close below the 90%. The last few times we've come back up above it. So, you know, watch for some brief periods of bullishness here and volatility, sort of a jump in here, to see whether or not we're able to maintain this position in this bullish territory, which we haven't been able to every other time that we've crossed down below. So, you know, just kind of keep our eyes on this going into next week, and especially with that cluster on the Nasdaq and how bullish we've been, to see if we get any kind of jump here. If I were to take a look here at the volatility, at the range, this one here, and we'll take a look at the VIX, and then let's just take a look at a quick little short-term 3-day ATR on the VIX. So we'll do that one, and then we'll do this one here. You'll see that, you know, this is a little bit. It was a jump up. We were down on the VIX, but we started up high, and you can see because of that, the ATR is actually pretty relatively high, considering that the last 2 days we had bigger ranges than what we had seen previously. So it's brought the relative ATR range back up to 14%. So we're not like in any kind of, we're not susceptible yet, in my opinion, to this kind of jump in volatility, as long as these numbers, once we get down below 10%, into these lower levels, especially down towards 7.5%, that's when that makes us more susceptible to those types of moves. But even then, you can see you can stay down below 7.5% for quite a while before you get brief little jumps in volatility that coincide with at least near-term pullbacks in this case. All right, before we look at some other what's driving this price action, today's trade idea, just to review the technical analysis, we finished this week very strongly, very good bullish pattern, to the extent where we might be a little bit long in the tooth, especially on the Nasdaq. But we've seen this before. We saw this very, very similar pattern in 98, 99, or late of 98. That really was a springboard into a more than a year's worth of nearly 200% gains. Obviously, I don't know whether or not we can replicate that, and the move that we had was actually bigger. The downside move that we had was bigger than the one that we saw in October of 98. But regardless, we've seen this move before. We've seen the story play out, and it doesn't necessarily mean that we are extremely overbought right now to the point of immediate falling off a cliff downturns. The market can stay irrational like it did then a lot longer than you can stay solvent if you try to expect the market to fall and then trade accordingly. Trade what you see. We trade what we see, and we continue to see very strong bullish trends, and the potential for noisy drops, but still nothing imminent in terms of immediate turnarounds. And we'll keep our eyes peeled throughout this next week, especially if any of those signs start to crop up again. So what do you think? Do you agree with that assessment? Do you disagree? Comment down below in the comment section, especially if you disagree. What are you seeing that suggests otherwise? Maybe you're a lot more bullish than I am, or maybe you're a lot more bearish than I am right now. What's driving that opinion? What charts or indicators are you looking at that drives that? And share that in the comment section. All right, let's take a look now at what's driving this price action here. And you can see over the last 3 months the move that we've had, and not only in the Nasdaq 100, which obviously has had a really, really strong run that's well known, but you can also see too that emerging market stocks have really kind of taken off here in the last few weeks. A couple of weeks here has had a really nice run to the upside, even with small cap stocks kind of starting to kind of lag a little bit, and in developed market stocks, international stocks also lagging behind. But you can see with this drop in the dollar, it's having an impact. Commodity prices are rising, gold is rising, emerging markets are rising, the Qs are rising, all driven by this move that we're seeing and continue to see in the dollar. This little drop that we've had the last few days, strong bearish posture. Intermediate line staying below market sentiment line, or increase in the near-term line, but looking like setting up for a bearish near-term high point. Big driver that we see in the dollar, and you can see the nice little piercing line pattern that formed after yesterday's oversold cluster on yields, and plenty of room for this to turn around. And start to make their way, yields start to make its way higher again, and get away from this strong bearish pattern that we're seeing on its market forecast chart. You can see if I were to look at the Bollinger Bands of TLT, which is even longer term than 10 years, you can see the dark cloud cover it's forming after getting up above here, the upper Bollinger Band. Still pretty strong level, but again, getting this type of move, and eventually if we were to ever break this 164, you can see the potential for this to fall very quickly down to 145. Would be a sharp move to the downside for long-term bonds, and would coincide with a sharp move to the upside in risk appetite that you think we're bullish now. Wait until the safety trade unwinds a little bit. I mentioned to you the increase that we're seeing in commodity prices. Look at the move that it has to really take off and just move up to 15. it's a significant move to the upside, and we're just barely getting to be strongly bullish here in commodities. So there's an opportunity for the risk trade to really grab hold as a safety trade, and the dollar both start to move more to the downside. All right, now let's take a look at the same chart with the sectors and how they've performed specifically over the last 3 months. And look at this. I mean, here's QQQ essentially. There's technology, discretionary, communication services. Energy was a winner for a good chunk of time too, and it's since declined. Industrials and financials had a good little run here up to that July 8th peak. They've since declined, and it's now continuing to be. You can see real estate and utilities are down. It's a safe haven. These safe haven staples as well, all down. They're all lagging behind. It's a strong run coming off of this March 23rd low point. You can see, different areas of the market have had their kind of turn, their day in the sun. But it's discretionary and technology that have stayed, and communication services have really kind of ramped up here, and energy materials with the weak dollar have been doing well until this little drop in energy stocks and materials, so continuing the hold up. And you can see staples down here at the bottom, and utilities and real estate and financials and industrials all lagging behind. Healthcare as well, lagging behind after it kind of had some outperformance initially, and then really lagging behind the rest over the past few weeks. So it's, that's the market leadership. There was some chatter for a while about the leadership changing to this kind of financials, industrials element, but the reality is that technology and communication services and discretionary are continuing to be our leadership, and when they're not, and when they're the leadership to the downside and everything's dropping, then we know we've got some things to worry about. And you can see the overbought clusters right now in discretionary and communication services. Interestingly enough, we don't see dark green shading and the green lines across the board. In fact, in financials and industrials, we have dark pink shadings and red lines, which we continue to also have on the energy sector. You see the utility sector also has dark pink shading and red lines. So again, as bullish as we are in this area, we're not broadly strong, extremely bullish. Materials and staples kind of show some sideways action here, but still some strong bullish patterns, but not nearly as bullish as what we see on these two charts. I mean, look at this, these 3-month returns, 26.5%, 25%, 23.71. If you look at that compared to all these others, it's largely this is the type of market we're in. Those are the stocks that have been doing well and continue to do well, and everything else is flat at best, if not showing some bearish patterns here. All right, so let's take a look now at our trade idea of the day, and the stock we wanted to take a look at, Archer Daniels Midland. You can see had dropped, showing dark pink shading, red line briefly, but then today's rally, after breaking the 38% retracement level and even getting to the midway point of the retracement zone, we popped it right back up. Big, strong momentum line up. The near-term line climbing above 50. The intermediate line is down, and that's hence the dark pink shading, but you can see it's a nice little rally that we have going on. If you look at its long-term chart, you can see how sideways, big, strong range, very small body in the Heikin-Ashi, multiple weeks, continuing to be the case with earnings coming up, mind you, here in a couple of weeks. If you take a look at like the Bollinger bandwidth for Archer Daniels, you see again that we hit that bottom band and briefly even closed below that lower band, and then pop right back up to the middle of the zone. And you also see too that we have this point of control is right here on $40, $40.50, and we're most of this year's range, well, 70% of this year's range is right here. But you notice we're stuck right in the middle. The whole value area is stuck right in the middle of the normal range for Archer Daniels. You also see too that it's DMI. You can see both the lines hovering right around 25 with a falling ADX line. You look at its trend strength indicators here, and you see very, we're above the cloud, but we're also showing some bearish signs, like the red lines below the price, the green lines below the blue line. The price has been below the blue line. We're getting noisy patterns here, so it's really setting up for, you know, a kind of a sideways action move. Here's the move off of that 50% level. MACD is turning up, stochastics is turning up. So what we can say is, we can say, okay, well, let's take a look at selling the $36 strike price of low 20 delta, buy the 33 for to manage the risk, sell the 42 strike, buy the 45 to manage the risk. So what that does here is it gives me kind of a sideways action, you know, right in between these areas. And you notice that's where the blue lines are for the break-even levels. Here, let me bring up Archer Daniels again here on the Bollinger Bands. You see the top end, the top break-even is right around the top of the value area with a good resistance volume node there at the top. The lower break-even is down at the lower part of the value area with a good volume node down there as well. So, and with the point of control stuck right here in the middle, right where we can easily stay, and so you get your break-evens basically inside the value area for this. So unless we break out one way or the other, that's when you'll get the loss on this trade. Otherwise, we have, you know, potential for a few $100 of reward here as long as we stay in the middle. Like a lot of the other iron condors we have that are closing here in July, and a few that we've already started to open up, including this one for August. So trying to take advantage of a little bit of an increase in volatility and a false breakdown that after a nice good bounce back up towards the point of control, and the idea being that we'll hang around this point of control up and through this August expiration date. Alright, and that wraps us up for today. So you've heard from me now. Now I want to hear from you. Use that link popping out in the top right corner of your screen. That will take you to our Market Outlook forums at marketscholars.com. Post any new thread there with any questions or comments you have about any thing we talked about in the video. Reply to anybody else's threads, and let's keep this conversation going in between videos. Again, thank you very much for watching. Remember to subscribe to our YouTube channel, hit the thumbs up icon down below, comment on our video, follow me on Twitter for more content between the videos, join our community at Market Scholars, as well as our Facebook group that we've created. And as always, have a great rest of your weekend, everybody, and we'll see you all on Monday.